Hi guys, welcome to the price action manipulation program level 2 class. So this is Elson over here, and if you're watching this video lesson, I believe you have went through the entire curriculum and content in level 1 and you're proficient enough to bring your trading to the next level, right? In level 2, you're going to learn more strategies and tactics and techniques, right, in manipulation trading. And I believe this will open up your skill set, right, and toolbox when you trade the markets, right, the trade manipulation in the market. So for level 1, you will have learned the important foundation in price action manipulation, such as false top, false bottom scenarios, which is a special kind of double top, double bottom. And you have learned the execution signals, right, the execution signs, the bullish EXE and the bearish EXE. All these you're gonna apply them again, right, in the level 2 class, right, when we go through different kind of additional kind of strategies. Okay, you also have learned the very important concept, right, in manipulation trading in level 1, which is entries and exit techniques in the sweet spot as well, right. All these will be applied again in level 2, right, and level 2 will go into other asset class such as futures, forex, and different style of trading. For example, short-term trading in stocks, forex, and futures as well. And most importantly, you're going to learn the additional strategies and even some of these optional strategies that I personally teach my students. Right, it's called the upside, inside bar break strategies, for example. Right, and you also learn the accumulation and distribution rotation model, which is understanding in the big picture how boom and bust cycle occurs in the market and how do they actually recover, right? The common theme in the stock market, right? And most importantly, understanding this very important, right, pattern that happens when prices are in no man's land, right? They do this thing called wave up, wave down, flush down, right? This will help you, right, when you trade the markets and to gives you the additional edge that you need to have, right, to be a more consistent and profitable manipulation trader. Okay, so before I begin the lesson, right, I just want to share with you guys this quote from Jesse Livermore, which says that, right, which is really the foundation of what we cover in our level 1 and level 2, right? We all believe that what Jesse Livermore do is, right, there's nothing new on Wall Street, right, or stock market speculation. What happened in the past will always has happened again and again and again, right? This because human nature does not change, and it's human emotions solidly built into human nature that always get in the way of human intelligence. So as you can see is that even Jesse Livermore, who is a legendary trader in the 1920s, right, he realized that trading the markets is not just about having a lot of IQ, right? You need to still have a bit of IQ lah, to do calculations, right? But it's really still about your own psychology as well, right? And also understanding the psychology of the markets that you are trading, which is why the manipulation course in price action is very focused on how the retailers are being deceived, right, bull trapped, bear trapped by the market makers. Okay, so this is a summary of the execution steps. So I just want to emphasize here that, right, in level 1, right, you have studied the bullish and bearish FSCA and UR DR1 structures. So in level 2, right, the UR2 and DR2 is not really a new strategy, but it's a subset of the UR1 DR1 to give you a sense where when this kind of structure occurs in the market, it gives you a warning sign of a key bottom or a key major top, for example. And this has helped me a lot. It doesn't happen frequently because market doesn't reverse all the time, right? It only at certain critical point of the market, at the critical top, critical bottom, right? This gives me confidence, right, to enter the stock if it's at the bottom, or to size out my trade, exit, right, if it's getting topish, showing signs of a UR2, for example. So you're going to learn this understanding the ultimate top bottoms scenarios, right, in manipulation over here, and also uptrend continuation, downtrend continuation 1, uptrend continuation 2, downtrend continuation 2. So these are the two variations in continuation trading, right? Price continuation trading, uptrend retracement, downtrend retracement, that is still using the same force top, force bottom scenarios. So mainly all these strategies are based on force top, force bottom scenarios, but being used and the structures are being defined differently. Okay, so you're going to learn a lot more, right, with examples when you go through the lessons. And I'll also be sharing this additional strategy called inside bar break. Okay, so this is not really a manipulation, there's no manipulation implication, but it's really a strategy to trade a fractal in the market. Fractal means you are basically trading something like a repeatable pattern in the market based on price action, because price action trading has certain existing strategy that price action trader use, but the way I use it is my own style. Understand? It's like I'm not the one who invented a candlestick, but the way I use candlestick is my own style. So over here, I'm going to learn my style of trading inside bar break, right? For price action trading, for those of you keen to trade this additional strategy, you can explore as well. But my suggestion is to focus more on the main strategies here first, especially if you get overwhelmed, right? Focus, like I said, right, on one or especially one set of strategy first, right? Is for example, right, you learn plus minus first before you go into divide and times, right? You don't go straight to divide and times without understanding minus and plus, right? Until you understand minus, plus, divide, times, then you go on to what? Calculus, right? Like square root, to the power of, right? Understand? So step by step, right? Measure yourself, right? This is additional. I put this word additional means you, after you really understand everything, then you go into this. Is to give you additional tools to use, right, in different market scenario. And this is mainly for trading higher time frame, right? When you go into the lesson, it will share with you more details, right, on how to trade this on the higher time frame. And for those of you who are into short-term trading, you are more of the exciting kind, right? You want something fast. So I would say that the feedback period, right, is less than 1 to 2 trading days. Right, the feedback is less than 1 to 2 trading days. You can explore the DR1X stock scalping strategy. So this basically solely focus on DR1 structure for in the 5 days 30 minutes chart for stocks. Okay, I explain more in details in the lesson, so go and check it out. It's very, I would say it's quite fun, right, to do this strategy, right? But my main in my trading is still focused on swing. Okay, so once a while, right, if I see DR1X happening in the stock market, I may still execute them. Okay, but I leave this strategy there so that it's there, right, for those of you who are keen to explore further and see if it suits you. Okay, if you are a very busy person, please stick to swing trading. If you have more time, right, at night, or you don't mind staying up very late for Asian students, right, because this one you may have to stay up until very late, like 3-4 a.m. at night. Okay, so all these strategies give you tools to use. You must, as a trader, make the own decision whether which one suits you better. Okay, don't have to do everything, but it's good to understand all these things, right? So that you know that, okay, this at the end of the day, after a while, you realize which one suits you the best, and you just focus mainly on that. Understand? You don't have to do everything. That's my point. Okay, and also you will understand how to do short-term trading in futures and forex market, and especially I'll go through it more in details about the futures market, the forex market, and to do risk control, risk management for these two markets, because their tick sizes are different. So I have different techniques on how to do risk management. Okay, so you can take a look into this lesson as well. Okay, for those of you keen. In terms of the execution signal, EXE, right, they are the same for L1 and L2. Even the entries and exit that you have learned, sweet spot, is the same. Lucky entry, right, you all heard in the webinar, lucky entry, and what else? Smelly trade, all these are the same, right? The understanding is the same, right? If you don't know what's lucky entry and smelly trade, please watch the webinar, the previous webinar again. Okay, I covered that in details, right? Okay, and also in the lessons. So the risk management techniques, right, is applicable, right, for the similar to short-term trading, right, and even the additional strategies. Of course, like I mentioned, for futures and forex, the risk control techniques is slightly different. Okay, it's slightly different. Okay, so go and watch the video and you understand. Watch the video lessons and you understand. Okay, and you also understand the big market cycle. So this one, right, you must understand sometimes the things that I teach you guys. The things that I teach you guys may not be applicable today or this week or this month, but it gives you the at the back subconscious understanding that if one day the market behaves like this is what I'm going to do. For example, this distribution rotation model, right, is being used only in March, very recently, March 2020, when there was the crisis, right, the crash, right? Because we all know that through this lesson that I teach students, that market usually bottom when there is a false bottom, major false bottom, like a DR1, right, after a crisis, right? So it will be a good time to start to go into the market whenever a DR1 false bottom occurs after a crisis. So this gives you understanding to give you confidence to enter when there's a crisis and to preempt yourself for the next crisis ahead. Okay. And also price momentum analysis, right, is to share with you this scenario called wave up flush up in no man's land. For in